You'd like to figure out if student loans are forgiven due to death and disability. The answer is yes, but you need to double check. The new Tax Cuts and Jobs Act that President Trump and Congress signed in December 2017 makes some big changes in this area. The main one is there was a scandal because a veteran with a traumatic brain injury had about, I think, $200,000 of loans that he had forgiven because obviously he's disabled from a traumatic brain injury from serving our country. And then he got a bill from the IRS for $70,000. I'm not making this up, folks. So he gets the bill for the $70,000 and calls some representatives. They take up the case, and then they have gotten this provision changed now in the tax code so that when someone gets their loans forgiven due to what's called a total and permanent disability discharge on their student loans, that forgiven balance is no longer considered taxable income. You used to get something called a 1099-C, and this form would go out to you when you have loans forgiven due to some sort of event like this. But for death and disability now, for federal student loans, you should never have to pay taxes on a forgiven balance in the unfortunate event that you become permanently disabled or you die. Now, that permanent disability is a little bit unclear. They will regularly do searches of the Social Security rolls and of the VA rolls for people who are permanently disabled, and you have to meet certain criteria to be considered permanently disabled for your student loans. It's not something that's easy to get, but the nice part is that if you lose the ability to perform any employment function, that you won't have to worry about having a giant monthly payment for your student debt. Now, for private student loans, it's a little bit more complicated. Many private lenders will actually say that they'll forgive your student debt in the event of death or disability, but it's discretionary, not contractual. The difference between discretionary versus a contractual promise is a contractual promise is required, whereas a discretionary promise is not required. Most of these private lenders will include language that gives them flexibility to forgive the loans or not, even though they almost always do. In fact, I can't really think of a case where a private lender has not forgiven loans due to death or disability in a really extreme situation. The issue that you would need to think about, though, is why not go ahead and protect your family? Protect your family with a simple amount of life insurance, term life insurance. You can get a 10-year or 20-year policy for maybe $20 to $40 a month, and it would cover you for $1 million. Disability insurance is a little bit more expensive. It might cost you $100 a month, perhaps, or $200 a month, and you want to make sure that that disability policy covers an own occupation clause, which means that if you have no longer the ability to practice your own occupation, but you can still work in some other capacity, that the federal and private lenders would probably not consider you permanently disabled because you can still work. However, you would want to take a look at getting coverage in the event that that happens so that you could pay your student loans. So you should always make the decision based off of what's good from a high-level picture. You shouldn't make the decision on refinancing based off of individual rules on death and disability because they're easy to protect against. Cutting 1 or 2% off your interest rate on your student loans is way better for you than the cost of increasing your disability and term life insurance protection. So make the decision independent of those things, but just know that death and disability protections for student loan borrowers continue to get better. If you have questions about this and want us to make a plan for you, just reach out at studentloanplanner.com with any of the contact buttons and we'll be happy to help you out.